Hi, good morning, guys. Going to start one time because I think this class is going to be kind of intense with some of the work that we have to do. Remember, like last week, we had the introduction, so just going to try and go into a little revision. So if you would remember from last week, we had 4 types of accruals and prepayments. We had the accrued expense, accrued revenue, prepaid expense, and prepaid revenue. And the accruals was when the amount paid or received was less than the amount incurred or earned. Remember, we were supposed to compare 2 things. If they didn't tell you what was accrued or what was prepaid, what was owing or what was paid in advance, then you had to compare the 2 figures, which would have been the amount paid and incurred for expenses and the amount received and earned for revenue. The prepaid is when the amount paid or received is more than. So that is how you're supposed to know. Just remember the 4 types: accrued expense, accrued revenue. So you have to identify whether it was an accrual or a prepayment, whether it was an expense or revenue. Now we are going to put it into the income statement. So that is what this class is going to be about, the introduction into it, and finally doing the income statement with it. So reminder, we are going based on the accrual principle, which states that when calculating net profit in the income statement, it is the expense incurred and the revenue earned that goes into the income statement. So this is in your workbook, so you can always take a look at it, page 224, but it just tells you what we just said there. Revenue recorded in the income statement is revenue earned, whether or not the cash has been received or not. So you always have to look for or work towards the amount earned. And the expense recorded is the amount incurred, not the amount paid, but the amount incurred. So for the income statement, this is what you're always working towards: the revenue earned and the expense incurred. So this is your income statement. We only have one expense really up here, which would be your carriage inwards. So this would fall into the same category as the other expenses when we do it, but we focus mainly on the bottom part, which is where all your expenses other than the carriage inwards goes, and your revenue. So these are your revenue and these are your expenses for your income statement. If you remember, we're going back to doing these things again, where you calculate your gross profit and then you add revenue. So what they're saying is the revenue here, like discounts received, interest received, rent received, commissions received, service fees received, all your revenue that goes here would be the revenue that is earned, or the income that is earned, whether it has been received or not, or whether you received more or not. So this is what we're going to be working out, what is earned. And for your expenses, it will be the amount incurred, whether or not you paid it or you paid more. So it will be the salaries incurred, the rent incurred, the advertising incurred, the discounts allowed incurred, the utilities incurred. That is the figures that we put into the income statement. Emphasizing that, right? So you're looking towards working out earned and incurred, because it's a cruel world. Yay. So we're going to go with the expenses first. Even though revenue comes first in the income statement, we always like to deal with the expenses because it's the more popular one. There are times, many times, as you guys would have seen, where you don't get any revenue at all, or you get little revenue, but you always have expenses. Always. Because the main revenue for a business is your sales. You don't have to have other revenue really, but a business must have expenses in order to operate. So you always have expenses, and that is why we focus on the expenses first. And we will see again, going to emphasize it over and over, expenses incurred for the period is entered in the income statement. So when you have your income statement and you have less expenses, it is the expenses incurred. Income statement, expenses incurred. The expenses incurred goes into the income statement. Y'all get that? I hope y'all got that. Because we're saying it over and over and over and over and over again. It is the expense incurred that goes into the income statement. So if the expense paid is less than the incurred, which we already did, that means you have an accrued expense. If the expense paid is more than the incurred, that means you have a prepaid expense. But what is important here, we come back to it again, most importantly, you must enter the expense incurred in the income statement. So whether or not you have an accrued expense or you have a prepaid expense, which is the expense that must go into the income statement? The amount that is incurred. So ways that you can identify the expenses incurred for the year. They might tell you. Okay, so they might tell you how much was incurred for the year. And what are some of the ways that you might see it if they do give you that information straightforward? They might tell you how much was due for the period. So they will tell you that for the electricity bill, $800 was due. That means that that is the amount that was incurred. Or they might give you the monthly expense, like you saw in our examples before where they said rent was $500 a month. If they tell you that, for you to find out how much was incurred for the year, you just multiply by 12, right? So it's as easy as that. So if they tell you that the monthly expense is $500, you will just find for the year, which would be 500 multiplied by 12 months, and that will give you $6,000 incurred for the year, and that is the amount that will go into the income statement. We saw this one as well. If they tell you the service completed means that that amount has been incurred. So if you see that language, this has been completed, that means that is they're telling you that is the amount that is incurred and goes into your income statement. If they tell you the bill amount, so they say the electricity bill is $800, what they are telling you again, that is the amount incurred. This one is an interesting one. When you take a loan, you pay interest on the loan, and the interest on the loan is an expense. How much is incurred in terms of interest on loan? It's usually a percentage. So they will tell you that when you take a loan, it's a 5% loan. So how do you calculate the interest on that loan? It will be the 5% of whatever the principal amount of is for the loan. You will see it further on and it will become clearer for you. In fact, I think I have an example for you in terms of two things. So for example, the insurance monthly premium is $200. All right, so what would be the insurance incurred for the year? Simply, they gave you the monthly premium, which is $200. So for the year, you just multiply by 12 months, and therefore your incurred amount will be the $2,400. All right, so this is what I was talking to you guys about. We have a 10% bank loan of $20,000. So the $20,000 is the loan or the liability. What would be the interest incurred by the end of the year, the amount of the interest on loan that will go into the income statement? So what would be the interest on loan incurred? It would just be the 10% by the total amount of the loan, and that will be $2,000. So this would be the amount incurred, and this will be the amount to go into your income statement. So what we've been doing here is when they do tell you what is the amount incurred, and you can identify they have told you what is the amount that goes into the income statement, so you don't have to do any working in terms of accruals and prepayments. You may have to do some working in terms of like percentage or the monthly by the 12 months, but they basically may have just told you what is the amount that goes into the income statement. However, what if they did not tell you what is the expense incurred? That means you now have to find out what is the amount that goes into the income statement, which is basically what they do most of the time. They don't tell you straight out what is the amount that goes into the income statement. You have to find out what it is. So this is what is required whenever you have an accrual or prepayment to calculate what goes into the income statement, or to find out what is the expense incurred. You add accruals to the amount paid, or you less prepayments from the amount paid. This is basically going to be our lesson. So once again, when adjusting entries, meaning accruals and prepayments, are required to the expenses paid to find the expense incurred, you add the accrual or you less the prepayment to find out what the expense incurred is. So we're going specifically now. Expense incurred, add accruals. You're seeing my AA. We are using the battery. Remember this ridiculous looking battery man? AA, what does the double A stand for? Add accruals. See how easy? Add accruals. AA, double A batteries, you always add accruals. So whatever the accrued amount, if they give you an accrual and they give you the amount that is paid, to find the amount that goes into the income statement, which is your expense incurred, you would take the expense paid and you would add accruals. We're going to see if you understand that. Home's guest house pays electricity each month. At the end of the financial year, Homes paid $6,500 on the utility but still owed $500. What was the electricity incurred for the period? You always add accrual, so 7,000, which was the answer given just now. So as easy as that, add accruals. So let's just see how easy this one will be. Paid 2,000, accrued amount of 400. What is the expense incurred, or what is the amount going into the income statement?
2,400.
D, 2,400. Once you identify it as an accrual, what do? You add it. So business paid rent of 200 monthly, still owed 600, which means it was an accrual. This one needs a little additional working. So what is the amount that goes into the income statement for the year?
3,000.
3,000. Thank you, whoever. I hope there's nobody that isn't getting it. This one, you just had to find out the annual amount or the yearly amount. 200 multiplied by 12, which is 2,400. Add accrual of 600, 2,400, add 600 gives you 3,000, and that is the amount that goes into the income statement. Easy. For prepayment, what did we say that we do? It will be less prepayments. So it's the opposite of the accrual, the battery man, the add accruals. You will just have to less the prepayment. So less prepayments, if you are given the amount paid and you're given a prepayment, just do the opposite and you're lessing. So if the insurance premium is $1,200, but you have a prepayment of $300, what is the amount that is incurred? Your lasting prepayments?
900.
900. Thank you. Rent paid 1,400, 400 in advance. So paid for the following year. That is a way of you knowing that it was paid in advance. If it's not for this year, that means it's for the following year. That is in advance. So that's a prepayment. So you have to less it. So that'll be 1,400 minus 400, which should be B. Oh, all right. So the rent paid of 3,600 was for 2 years. So half of this is a prepayment, which is the amount that will go into the income statement. I want somebody to answer this one for me.
1,800.
Yeah, there you go. Excellent. And I will see from the video who that very confident person was. So 1,800. They may not be this direct with you, but if they tell you that it is for 2 years and the expense incurred is for 1 year, then you just have to find out for the 1 year. And if it's 3,600 for 2 years, that means for 1 year it will be half of that. Okay? All right, so we're going on to the revenue, and it is the revenue earned. So like the expense was the expense incurred, this is the revenue earned. Emphasis again. Hope you got it. And it's the same like the expenses. Revenue received may be less than the revenue earned, and then you have an accrual, or it may be more than the revenue earned and you will have a prepayment. But the most important thing is that what goes into the income statement is the revenue earned. Whenever adjusting entries are required to revenues received to find the revenue earned, it's the same as the expenses. AA batteries, you add the accrual or you less the prepayment. So it's the same thing. There's no difference, there's no opposite. You always add the accruals. You just add the accrued revenue to the revenue received, which you will also find in the trial balance. And if it's a prepayment, to find the revenue earned, you just less the prepayment. So revenue due for the year or the period, you would have revenue due for the year. They tell you that is the amount that goes in the income statement. If they tell you a monthly revenue, it will be multiplied by 12 to get the annual amount or the yearly amount. Or they might tell you how much was completed or earned. That is the amount that will go in the income statement. But the main point that we make is if the period is for a year, whatever information they give you, you are working it out for a year, right? Which is 12 months. So just always keep that in mind. So that is in addition to you add accruals and you less prepayments. And this is for both expenses and the revenue. It's always this, right? Batteryman and, well, I got to hold the sign for. So going into the income statement, this is the part that you will always have to work out the amount earned and the amount incurred. So you may have to add accruals, less prepayments for the income and for the expenses. So we are going to do an example. Everybody sees the trial balance. Remember your trial balance with your debits and your credits. Your expenses will be debits, of course, and your revenues will be credits. So the trial balance or the cash book, but in this case we are using a trial balance, shows the amounts that are paid and received. So repairs, in terms of repairs, is $500 that was paid. In terms of utilities, it was $300 that was paid. In terms of rent received, which is credit, that means it's revenue, it was $1,000 that was received. Interest revenue, it was $100 that was received. Then down below in the additional information, which is how your questions will be, they will give you the adjustments, or they will give you the information like the incurred or the accrual and prepayment. All right, so additional information, we make it real easy for you, is either accrual or prepayment. So we have no incurred in there already for you that you have to work out 12 months or whatever. It's either an accrual or a prepayment. So that is where you would find that information in the notes down below, or the additional information that will tell you what has been accrued or what has been prepaid, if any. So once again, trial balance tells you the amount paid and received, and the additional information or the notes tell you if there are any adjusting entries that have to be taken into account, any accruals or prepayments. So we're going to do very quickly, and we're going to take the first additional information, which would be repairs paid in advance. So the first thing you will do is identify whether this is an accrual or prepayment. Very easy. Paid in advance is another way of saying it's a prepayment. So if you have a prepayment, what you do with prepayments, you always less the prepayment. So your repairs paid $500 less your $50 prepayment means you have $450. The $450 represents the expense incurred, which is entered in the income statement. So here you have your income statement. You have expenses, and as you can see here, repairs, and you have the working, and the answer goes into the column 450. I want to emphasize this, please. You don't have to put the word prepaid. We put that there for you so that you know, since we are introducing it to you. But when you are doing your income statement for me, your working is going to go at the side here. So let me just go back and show you what I want when you're dealing with this. So you have your expenses. Repairs is an expense. You go down here and you see that we have a prepayment. So what you will do is you will go into your income statement. You have expenses. You put repairs. Since there is a prepayment, that means that you have to do working or an adjustment. So you are going to open brackets, put the amount that was paid, which you get from your trial balance, minus your prepayment, $50, close brackets, and then put the answer in the column here. Clear? So you don't have to put the word prepaid, but you must have your working next to your expense if you need to. Right? I hope you all are getting what I'm saying. I'm going to be emphasizing that over and over. Working is extremely important, because if you get the wrong answer, you just get 0. But if you have working and we can see why you may have gotten it wrong, you may get some marks. So please, I'm begging you, because some people listen to me and some people don't. I know this from experience. So you're always going to put it like this. For prepayments, you would just put minus. For the accruals, you will put the add, which we will see for the next one. So we did the first one already. We're going to do number 2. You all realize how easy this is, right? Utility is accrued. What is accrued? It's an accrual. What do you do with accruals? You add them. You add accruals. You're AA battery man, right? So add accruals. So what you're adding the accruals to? the amount paid, which is in your trial balance, $300. This amount paid, you're adding your accrual. How much is your accrual? $75. So when you add that, you get $375, and that is the amount that is incurred and goes into your income statement, like this. So you see the highlighted area, you have utilities under expenses. You would put your working, open brackets, 300, which is the amount you got from your trial balance, plus the accrual. So add the accrual, 75, and your answer goes in the column $375. Got it? Yeah? So we go to the third one, easy, in advance, which means it's a prepayment. What do you do with prepayments? You less it. So you will just simply go rent received. How much was received? $1,000 less the $200, which will give you $800, and that is the amount that goes into your income statement. Since this is revenue, you have it here. Rent received, you're working, open brackets, 1,000 minus the prepayment 200, answer in the column 800. And the last one, interest revenue owing, accrual. What do you do with accruals? Add the accruals. How much was received? Trial balance 100. Add your accrual of $25. That gives you 125. That is the amount that is earned, goes into your income statement like this. Under revenue, interest revenue, 100 plus 25, and you put your answer in the column there. And that is where your income statement will look like this after you have done all of your adjustments and stuff. You had 2 revenue and you had 2 expenses. All of them had an adjustment to be done. In this case, they had a prepayment, so you lessed it. This case, you had an accrual, so you added it. This one, a prepayment, less, accrual, add. And the answers go in the columns there, but you show your working on the side there. If an expense or revenue had no adjustments, you would just simply put the revenue here and just put the answer from your trial balance here. Or you would just put the expense and you would just put the answer there. But once there's an adjustment, meaning once there's an accrual or a prepayment, you put the working in brackets, less prepayments, add accruals, and you put the answer in the column. And that's it. That's the end of it. That is what you do for an income statement. That is basically the end of the class, and what you get out of it, add accruals, double E, right? So you're always going to be adding your accruals. Simple as that, and you will always less your prepayments, whether it's expense or revenue. So once you identify it as an accrual, add it to the amount paid or received. Once you identify it as a prepayment, less it. It doesn't matter whether it's revenue or expense. Easy as that.